Good morning, everybody. It's Patrick Johnston here again. GoDominicanLife.com and LasTerrenasLife.com. We are your real estate brokerage here in the Dominican Republic with 3 locations to serve you. And of course, I am the managing broker for the entire team. We are 15 people strong, representing buyers and sellers nationwide here in the Dominican Republic. Today's video, I want to talk about why real estate is a great investment in the Dominican Republic. There's a lot of things that you need to consider if you're from Canada or the United States or UK or Europe. You know the knowledge of your area and the reasons why investing in your country is important. But I want to give you some highlights of why it's important here in the Dominican Republic. I was a very active investor in Canada. I had more than 2,400 rental apartments that I owned and operated in my system, meaning I bought them, managed them, sold them, traded them, renovated them. I went through the whole process. I had a team of 40 people on construction alone, just keeping them building and building and renovating. So I know the scope of real estate, and now being involved in real estate here for the last number of years in the Dominican Republic and built a home, I feel these tips are probably very valid for you to consider as you approach real estate investing in the Dominican Republic. So number 1, let me talk about this. Leverage. Look, the North American market, especially Canada and the United States, has been going like this in the pandemic. Literally, when I handed my real estate license back in Nova Scotia to the licensing board and retired, voluntarily retired, it was roughly between 9 and 16 months of inventory in the market at all times. It was a buyer's market. When you look at what has happened in the last 2.5 years in the pandemic, in that same exact region, they have literally 35, 45, maybe 60 days worth of inventory. And the amount of buyers that are looking for that inventory is crazy. So what that has done is made value go like this. So at the same time, you have interest rates in Canada and the United States that are at current historic lows. Like I'm talking 1% to 2%, and 2% is expensive. So anything sub 2% is ridiculously cheap from an investor point of view or a homeowner point of view. It is very dangerous, though, if you think that that type of interest rate will continue forever, which it won't. So you have to really be careful that you're not over leveraging yourself. But on the same time, a proper equity harvesting, as I call it, whereby refinancing an asset in Canada and taking out the gain that you've had in the last, say, 2 years to acquire another asset, let's call it here in the Dominican Republic, that has income-producing activities that offset the money that you harvested out of your equity in Canada, plus more as a hedging effect for interest rates going up. That's called leverage. I've done that my entire life. I started with literally $22,000 is what I started with 25 years ago. And I finished with $138 million in assets. Okay? So I'm talking about the very foundation of leverage. Equity harvesting out of your existing asset, taking that equity at the percentage of the interest rate that is there, buying an asset in cash or with financing or combination of both, renting it out, taking the profit and making sure that you cover the interest rate differential that you took the equity from to acquire that asset, and then having 2 assets either gain in value or gain in profitability for you is called leverage. So you can do that quite well now from the US and Canada. Even if you did nothing to your asset in Canada in the past 2 or 4 years, the value has still gone up. So if you sit on that asset and do nothing with that equity gain, you're just doing nothing to move your life forward. Some people think, well, if I pay down my personal asset, my life is going to be greater. Not necessarily. Life must go on. If you want to build freedom in your life, you have to do the routine that I just described to you. And that'll help tremendously to move your, either to make you totally self-sufficient so you do not have to work. It can reduce your retirement, or simply put, you can double your personal income from what you've been earning in your, say, paycheck routine. Number 2 is called income. Income in US dollars is what all the rents are here in short-term rentals. So whether it's Airbnb, VRBO, Booking.com, Expedia, direct-to-consumer, via real estate brokers, all that rent for anyone coming to the Dominican Republic in tourist areas is always is always held out in US dollars. Sometimes it's converted in the US dollar rate into pesos. And at that point, it doesn't really matter to you, but the baseline of income is generated in US dollars. Why that is important for you is this. If you take equity harvesting from your asset in Canada, which is a Canadian dollar equivalent, at a super low interest rate, acquire an asset here that cash flows and is in US dollar cash flow, gives you so much lift to consider when you're investing. You know, if I use the example of Canada to Canada, if you equity harvest out of a Canadian asset and then buy another Canadian asset where the appreciation has already gone like this, the risk is now twice because you have two assets that are at the highest point they've ever been, at the lowest interest rate that has also ever been in history. It becomes a little bit dangerous. So what I'm suggesting to you, subliminally and directly, is you take your high producing asset, which is the greatest value in North America, and you harvest equity out of that and buy real estate in the Dominican Republic at 1/3 of the value for comparable style homes that you're equity harvesting from right here in the Dominican Republic and produce US dollar cash flow income. Does that make sense? You may have to pause this, rewind it a little bit, and understand. Just the currency exchange lift is 27% as of today's date. 27% just on currency. Think of that. Okay, next one is forced appreciation. Look, in North America, if you see what's happened in any major city or medium-sized city or small town, is for some reason during this time in the pandemic, there have been so many more buyers and so fewer sellers, but the business is going so fast that the appreciation has been forced by supply and demand. It's not indifferent down here in the Dominican Republic, but we're talking two different things, because you are coming from let's call it an average sale between $500,000 to $1 million in North America, whether you're in Canada or the United States. That seems to be sort of the average. And your average sale in our system nationwide in the Dominican Republic in 2021 was $242,000 US. So, do you believe forced appreciation can take your asset in Canada from that was in a range between 500 and 800,000? Do you think it'll go to 1 million to 1.6 million in another 2 years? I don't think so. That's me personally, because this is the first time it's ever gone up in that much value. So it's better to purchase in a lower priced market and have forced appreciation to the level that you're currently used to in North America, but reaping the gain out of both markets. Taking the equity that you've gained in one market, buying an asset here and driving the value up, okay? So that is very important to understand. And banks enjoy properly leveraged properties in any country if you can present certified cash flow and expenses for the property. We're going to talk about that on a later video called ROI and cap rate, but for this moment, taking an asset of $500,000 to $800,000 average and buying an average asset of around $242,000 here and having US cash flow is very desirable. That is what I'm doing right now. Number 3, tax benefits. You may think in North America, well, look, in North America, there's very few tax benefits. You'll have some tax exchanges in the US that exist, meaning if you sell a property and you reinvest in less than 1 year, that gain can be frozen as long as you reinvest it in another asset. It's a T41 or T51 exchange. That exists in parts of the US. In Canada, there really is no gain. There is no tax benefits per se that are clearly defined. You have some capital gains freezing. If your company has had a tax loss for up to 5 years, you can take advantage of those paper losses on your gain if you sell. But that is just an accounting thing. It's not a government incentive. So the tax rates aren't to your advantage in Canada, especially when it comes to personally owned property. Corporately owned property, meaning if you bought a property in the US in an LLC or in Canada an incorporated company, and then you sell it, you can have those loss carry forwards by depreciation and then have a gain. But here in the Dominican Republic, there are tax incentives issued by the government that allow you to legally, upfront, out of the closet, take advantage of. The most important one, it's designed in many tourist areas. It's called Confiture. It's a government-issued program that has lots of benefits, but the summary of them is this. Your 3% deed transfer tax, which is on closing when you buy a property, is zero with that program. Your property tax annually for up to 15 years, which is 1% of the value above $150,000, is absolutely zero taxes. Otherwise, it would be 1% if you were buying a non-government incentive program, new construction. And number 3 is the profits you make on the rental income in this country on that program is absolutely zero tax to you. So, in North America, Canada specifically, because I'm Canadian, you never hear tax-free income legally without doing something extremely creative and in a gray zone. Number 2, you don't have free property taxes ever. And number 3, you simply don't have government programs like that, personally or in a corporation. So that is a huge benefit to you on tax benefits. Number 4, 1, 2, 3, 4, 5. Cash flow. Let's talk about cash flow. I'm going to give you an example of something that I'm buying. Okay, so in Las Terrenas, I'm closing on a condominium next week. It's already firm. It's already going through the lawyers. All the money is there. It's ready to be closed. It's subject to the lawyer just getting it ready. I've appointed power of attorney, so no matter where I am in this country, it'll still close without me, which is important for another video for me to explain. But that property, using the math, it's an off-beach property. It's a little older, probably 15-year-old apartment complex. It's still a condominium. It does not have a pool in the complex. I bought a 2-bedroom, 2-level, 1.5 bath condo for $75,000 American. And you may say, how the hell did you do that? Well, we're in the real estate game. We know when bargains come up. We know when things are a great deal. But let me tell you the structure of it. So, currently, there's a long-term rental tenant in that building for around I think it's $500 or $550 American per month. The condo fee is roughly $120 or $110. 6,000 pesos is what the exact amount is. The utilities are paid by the tenant, so that's good. But that's a long-term rental. I'm going to, in time, but not immediately, I will put that into our own Airbnb property management program inside of our own company. And through data-driven, real-time information from Airbnb, not from my head and making this up, but real data, the monthly income I can get in short-term rental on that property is between $1,500 and $1,800 American gross per month. Now, I will, of course, have expenses with short-term rental. I'll have to furnish it initially with some basic things for a 2-bedroom. It's not a lot of money. I'll have to pay the utilities, of course, because it's short-term rental. I'll have to clean it every time they come and go, but I charge a cleaning fee for that process to cover those expenses. And I'll have management, which is an expense. But it's an internal expense, but I still bill out to my personal investments exactly what you would pay for the same service within my company. Because I have a business partner in this. This is a personal investment, so I still have to watch that all happen. So even if I give up 30% of my expenses or of my gross income, I'm still more than double the average monthly long-term rental by achieving short-term rental with less wear and tear. So that's a whole other video, but I wanted to give you that description to say that yes, there are bargains, there are deals at all levels and price points. It requires you to do analytics, which we have programs and apps to ensure that the data is valid and real in today's time, not from this, not from making it up, not from the historical, but from real historical from Airbnb Online, to make smart investment decisions. And it doesn't mean you have to pay all cash. I'm doing a 75% note on that loan, or mortgage loan on that asset, because it still can carry the required mortgage payment. So why would I put 100% down when I could put 75% down and still have the returns that I expect? This is called leverage, it's called investing, and it's called thinking through data and what I call science, the science of revenue through apartment or condo investing to make your life work. Final one is security, and not the security like you're thinking, but it's called mental security, financial security, or stability in your mind for your future, for your retirement, for your kids' education, for whatever you believe is your security. It could be simply put, if you can generate enough income from 1 or 2 rentals to potentially offset any kind of employment loss or early retirement or forced retirement, that's called security. So let's recap. The benefits of great investing here in the Dominican Republic. Number 1 is properly leveraged assets that can benefit you. Not emotional purchases. Properly leveraged, calculated leverage. Number 2, income, US dollar income. Number 3, forced appreciation by market, supply and demand. Number 4, tax benefits, legal, government issued Dominican Republic tax incentives. Number 5, cash flow. Cash flow, meaning above expenses. And finally, security for your future. So these are the things that I have always focused on in my 25-year career of investing. I've learned, I've failed, I've gained, I've won, but this is the real information that you need to hear. So I'm Patrick Johnston. Go DominicanLife.com, LasTerrenasLife.com, your real estate company here in the Dominican Republic. If any of this makes sense to you and you want to speak to me directly about how to get started, our mortgage company can help you. Our Airbnb and property management company will help you. And I am an investor specialist. My phone number on WhatsApp is right below here. It's 829-525-1782. You can contact me live. I do answer live from 6 a.m. to 11 p.m. daily. Otherwise, I'll talk to you the following day. So have a great time. Invest in yourself. Oh, I almost forgot. The best expenses you can write off in your new investing career in the Dominican Republic is your airfare and your accommodation and your transportation of any sort to come to your investment to verify that it is still working properly. Final tip. Adios from the beach. Patrick Johnston.